The data just confirmed what central banks have been screaming for months. Gold closed above $5,000 for the first time in recorded history. And if you think this is just another milestone, another round number, another resistance level breaking, you are completely missing what just happened. This is not a bull market. This is a currency collapse in real time. I'm Marcus Caldwell, independent market analyst, and what I'm about to show you is the systematic destruction of fiat currency happening right now, while mainstream financial media celebrates new highs. Let me give you the number that institutional money is tracking. Over 1,000 tons. That's how much gold central banks purchased in 2024 alone, the highest annual accumulation in over 50 years. China, Russia, India, Turkey, Poland. These aren't retail investors panic buying. These are sovereign nations with access to intelligence you and I will never see. And they are dumping dollars and converting to gold at a pace we have never witnessed. When central banks move in unison like this, that is not a buying opportunity. That is an evacuation order. But here's what makes $5,000 gold genuinely terrifying. The move from $4,000 to $5,000 happened in 4 months. It took 5 years to go from $2,000 to $4,000, 4 months to add the next 1,000. That is not linear appreciation. That is exponential acceleration. That is the mathematical signature of a currency crisis entering its final phase. And while gold hit this historic milestone, you know what happened? Gold mining stocks barely moved. Gold ETFs saw outflows. Retail investors were selling. Let me say that again. Gold hits $5,000 and uninformed money is exiting while sovereign wealth funds and central banks are accumulating. This is the greatest wealth transfer in modern history happening in plain sight. Before I break down the 3 critical forces driving gold to 7,000, 10,000, or wherever this ends, if this institutional level analysis is valuable to you, hit that subscribe button and turn on notifications. This channel exists to give you the market intelligence that institutions understand, but mainstream media won't explain until your wealth is already gone. Your subscription directly supports independent financial research. Now let's examine what $5,000 gold actually means and why we are not even close to the top. Here's the context most analysts are deliberately ignoring. In 1980, gold hit $850, adjusted for real inflation, not the manipulated CPI data, but actual purchasing power erosion. That is over $10,000 in today's terms. So gold at $5,000? We are not at all-time highs. We are halfway to where gold went the last time the monetary system faced this level of crisis. But here's the difference. In 1980, there was not $35 trillion in U.S. national debt. There was not $300 trillion in global debt. There were not negative interest rates across major economies. There was not unlimited quantitative easing as official policy. The structural problems today are exponentially worse than 1980. So if gold went to the equivalent of $10,000 back then with fewer problems, where does it go now with catastrophically more problems? The mathematics suggest we are in the early innings of something historic.
Let me show you what is happening in the physical gold market right now because this is where the truth lives.
Gold closed at $5,000. You would think that means you can buy physical gold for $5,000. Wrong. American Gold Eagles. Premiums of $200 to $300 over spot. Some dealers charging more. Wait times, 4 to 6 weeks for delivery. 1-ounce bars. Same story. Premiums are exploding. Availability is collapsing. This is the disconnect between paper gold and physical gold that nobody is talking about. The futures price says $5,000. But try to actually take delivery of physical metal. You are paying $5,300, $5,400 and waiting weeks. That tells you everything. The paper price is a lie. The physical market is screaming shortage. And when paper markets diverge from physical reality, one of them has to give. History says it is always the paper that breaks. Now let me walk you through what is actually driving this move. Because it is not speculation. It is systematic currency debasement meeting institutional panic. China has reduced its US Treasury holdings by over $300 billion in the last 2 years alone. Where did that capital rotate? Gold. They are not buying gold because they think it is going up. They are buying gold because they have lost faith in the dollar as a store of value. When the world's second largest economy systematically converts dollar-denominated assets to gold, that is not portfolio rebalancing. That is a vote of no confidence in the global reserve currency, and it is not just China. Russia, India, Turkey, even Poland is citing national security as the reason they need physical gold reserves. National security. Let that sink in. These countries are treating gold accumulation as a matter of survival, not investment strategy. Here's what keeps institutional money awake at night. The petrodollar system is dying. Saudi Arabia is now accepting yuan for oil. China built an alternative payment system to SWIFT. Europe just launched an $8 trillion fund to bypass dollar settlement entirely. And now gold is at $5,000, which is the market screaming that we don't trust any of these currencies anymore.
Not the dollar, not the euro, not the yen.
None of them. Gold is the only asset that cannot be printed, cannot be inflated, cannot be manipulated by central banks. And the world is figuring that out fast. Let me give you the historical context that changes everything. Gold does not really go up. Currencies go down. When gold moves from $1,200 to $5,000, that is not gold becoming more valuable.
That is the dollar losing 76% of its purchasing power relative to the one asset that has been money for 5,000 years.
76%. Your dollars, your savings accounts, your retirement funds, they lost 3/4 of their value against real money. But most people do not see it that way because their account balance stays the same. They still see the same number of dollars.
What they do not see is that those dollars buy 76% less gold than they did 15 years ago.
And gold is not the only thing getting more expensive in dollar terms. Everything is: food, energy, housing, healthcare, education. All of it is screaming the same message. The dollar is dying. Now here is what happens next, and why 5,000 is not the top. The problems that drove gold to 5,000 are not solved. They are accelerating. U.S. national debt is growing by $2 trillion per year. The Federal Reserve's balance sheet is still bloated from years of money printing. Inflation is not transitory, it is structural.
And every time the government tries to fix one problem, they create 3 new ones.
Cut rates to stimulate the economy, inflation accelerates. Raise rates to fight inflation, the debt becomes unsustainable. They are trapped, and gold knows it. So what do you do with this information? First, understand that gold is not an investment. It is insurance against currency collapse. You do not buy gold to get rich. You buy gold to stay rich when paper currencies fail. Second, if you own zero gold, get some exposure. Even 5%, even 10%. Not because you are speculating, because you are protecting yourself from systematic currency debasement. Third, physical is superior to paper. ETFs like GLD are fine for price exposure, but in a real crisis you want the metal, not a receipt-promising metal.
Fourth, do not panic on pullbacks.
Gold could consolidate to 4,800 or 4,700. That does not change the fundamental thesis. Currencies are failing. Gold is the lifeboat. Fifth, this move is measured in decades, not days. If you buy gold at 5,000 and it drops to 4,700, you are not losing. You are preserving purchasing power while paper currency holders watch their wealth evaporate. Here is what most people still do not understand.
Gold at $5,000 is not expensive.
Dollars are worthless. Gold is doing what it has always done,
maintaining purchasing power while fiat currencies collapse. Every fiat currency in history has eventually failed,
every single one. The dollar is not special. The euro is not special. They are just the current iteration of a system that has been failing for centuries. The question is not whether currencies will continue to lose value. The question is whether you are positioned to survive when they do. Let me tell you what I am tracking over the next 6 months. First, central bank gold purchases.
If we see another 1,000 tons accumulated in 2026, that confirms the trend is accelerating.
Second, the premium on physical gold over paper spot.
If premiums widen beyond $300, that signals the physical shortage is becoming critical.
Third, currency volatility. Watch the dollar index. If it breaks below 90 and holds, that is confirmation that reserve currency status is eroding. Fourth, Treasury yields. If the 10-year breaks above 5% and foreign demand continues weakening, that is the debt crisis going kinetic. I will be tracking all four of these indicators in real time. Here is the reality nobody wants to say out loud. Most people still own zero gold. They are 100% denominated in dollars.
Stocks, bonds, real estate, cash, all dependent on the dollar maintaining value.
And gold just closed at $5,000, which is the market screaming that the dollar is in crisis.
But people are not listening.
They are watching financial news.
They are trusting their 401k.
They are assuming everything will be fine. It will not be fine. I am not saying the world ends tomorrow. I am saying the world is changing. And the people who see it early protect their wealth. The people who wake up one day and realize their life savings cannot buy what they thought it could. If this analysis gave you clarity on what $5,000 gold actually means, drop Gold Watch in the comments.
And if you know someone holding only dollar-denominated assets, someone trusting that the system will protect them, share this with them.
Not because I need the views, because they need to know what institutional money already understands. $5,000 gold is not the top. It is the warning.
The question is whether you are going to pretend everything is fine or protect yourself while there is still time.
I will see you in the next update.